Hello, everyone. Welcome to Environment America's Earth Day week. We're less than a week away from the 50th Earth Day. And what better way to talk about Earth Day and how you can help the Earth while you're quarantined at home than by talking about something you can do from the comfort of your home, fossil fuel-free investing. We have three wonderful people on our panel today. Tim Gray from the New York Times is going to be moderating our panel. Environmentalist Bill McKibben of 350.org is going to be one of our panelists, and Leslie Samuelrich, the president of Green Century Capital Management, is our other panelists. We're looking forward to having them talk. We're looking forward to your participation here on Facebook Live. And let me now toss it over to Tim Gray.
Thanks, Mark, and welcome to everybody who's tuning in today. Thanks for joining us. We're really excited to have you and to talk about what's an extremely important area, both climate change action and investing. So as you know, we've got two great panelists with us today. One of them I suspect everybody tuning in already knows, and that's Bill McKibben, who's both the co-founder of 350.org and a well-known and prodigious author, including lately of the Climate Crisis newsletter at the New Yorker, and I guess perhaps most famously as the guy who wrote The End of Nature, which I think was the first popular book that introduced people to the idea that, in fact, our climate. Well, Leslie Samuelrich, she's the president of Green Century Capital Management. Green Century is the sponsor of the Green Century Mutual Funds. I know from my work covering investments for the New York Times that Green Century is probably the most committed fund family in the United States to making sure that it reduces as much as possible the influence of fossil fuel in the investments that its folks hold. So with that as kind of an introduction, let me just add two more things. One is, as we talk about this, we're going to be talking about some investment ideas, but Leslie and Bill aren't giving investment advice. They're just talking about important developments in the money world. They're developments that are going to affect you, they're going to affect your family, but they're not telling you what to do with your investments. For that, you should talk to knowledgeable family members, you should talk to knowledgeable friends, or even hire a financial advisor. That's a more complicated decision than anybody should make. And then the second thing, I will kind of set the table for our talk with something that actually Bill wrote last year that I think really captures the sentiment of what they're going to be talking about. And so I'll just offer it up now to Leslie and Bill. And here's what Bill had to say last year in the New Yorker. He wrote, "I suspect the key to disrupting the flow of carbon into the atmosphere may lie in disrupting the flow of money to coal and oil and gas. In different ways, what Bill and Leslie are doing is trying to disrupt that flow." And so that's what we're going to talk about today. And let me kick this conversation off, Bill and Leslie, by asking, how did each of you come to realize that investments, that money mattered in solving the climate crisis? Leslie, you want to go first?
Sure. Hi, and thanks everyone for joining us today. Well, I realized it because even though I firmly believe that organizing and advocacy at the federal and state levels are really important, divestment became clear to me as another tool in this toolkit that we need to influence the fossil fuel industry. And I saw that happening when I started something called Shareholder Advocacy, which is simply leveraging the power you have as an investor to change companies. Green Century Capital Management does shareholder advocacy. We work with about 50 companies a year, but with the most intractable ones, it's not enough. And that's where we came into the divestment campaign.
And Bill, what about you? People think of you as an environmentalist, not as a guy who thinks about the capital markets and investments and stocks and bonds. How did you come to the conclusion that money mattered in trying to solve the climate crisis?
Well, look, at some level, we shouldn't be doing any of this, have to do any of this stuff. I mean, 30 years ago, the world scientists warned us exactly what was going to happen. They were just like the World Health Organization warning us in January about what was going to happen with coronavirus. And in this case, the world paid almost no attention. We've produced more carbon dioxide since those first warnings in the early 1990s than in all of human history before. So at a certain point, it became clear to me that our problem was not about data and reason and argument and evidence. We had won the argument. we were just losing the fight because the fight wasn't about any of those things. The fight was what fights are always about, money and power. And the fossil fuel industry, the richest industry on earth, had more money than God, and they were willing to use it to pervert and corrupt the system in the most profound ways. I mean, they built an enormous architecture of denial and deceit and disinformation that kept us locked for 3 decades in a completely phony debate about whether or not global warming was real, a debate both sides knew the answer to at the beginning, just one of them was willing to lie. Well, if you're going to stand up to that kind of power, you're going to have to figure out what levers you can pull. And really, there are 2 levers big enough to pull that make any difference. One of them is political. So God knows everybody's worked hard to try and change politics and policies. That's difficult when the fossil fuel industry basically purchased one of our 2 political parties. And we've had no action at a federal level on climate change to speak of for 30 years. The other lever you can pull is the financial lever. Try and make sure that the biggest companies, biggest investors on earth are moving on, understanding why we have to leave behind fossil fuel and head into a world of new energy sources. So that's why, I mean, that was, we can talk later about the kind of birth of the divestment campaign, which has turned into a kind of $12 trillion behemoth at this point. But that's, that's really the understanding that we're all working off of. This is a rigged system, and you've got to unrig it.
So Bill, with that, that's a great segue to what I wanted to next ask Leslie. You had talked about leaving fossil fuel behind. And Leslie, one of the things we're going to talk about today, maybe the main thing we're going to talk about today, is fossil fuel-free investing.
Mm-hmm.
For somebody who doesn't invest, for somebody who doesn't typically think about stocks and bonds, what does that mean, fossil fuel-free investing?
Well, at its simplest level, which is what I'll just answer now, is that for most people, and for Green Century, fossil fuel-free investing means investing without supporting coal, oil, or gas companies. And fossil fuel-free investing is a way for people who care about the environment, especially those who are concerned about the climate crisis that we're in, to stop supporting these environmentally reckless companies. That's it at its core.
Well, that's a great description. Now, Bill, you just mentioned we might get into divestment a little later. I'd actually like to get into it right now and ask you, when we talk about divestment and the campaign that you've led around that, what does that mean?
Well, so the first stage of this started 8 years ago or so. Naomi Klein and I and some others started looking at the new data that was coming out of the City of London, particularly from a remarkable institute called the Carbon Tracker Initiative. And they put out a small little noticed paper in 2012 that just did the job of adding up how much fossil fuel the big oil companies had in their reserves and comparing it with how much scientists said we could burn and stay below the targets we'd set as a globe. And as it turned out, these companies' business plans called for burning about 5 times more carbon than any scientist thinks would be wise to do. Once you know that, then you know that they're kind of rogue companies. Their business plan, cuts the planet off at the knees. So the question becomes what to do about it. Naomi and I were both in college during the apartheid divestment campaigns of the 1980s and had been active in those when rogue companies were supporting racial discrimination in South Africa. So we turned to that model. We didn't know how well it would go. It's gone far better than we would have anticipated. We're at $12 trillion, as I said, in endowments and portfolios now, including some of the biggest in the world. I mean, in the autumn, the University of California system divested its $80 billion pension and endowment fund entirely from fossil fuels, just saying, A, students are demanding this, and B, this stuff's too risky to invest in anyway. Now we're moving on fast to the kind of second ring of this fight, which is with the big financial players that support the fossil fuel industry. So that's why you've seen in the last year so much pressure on insurers like Liberty Mutual, so much pressure on asset managers like BlackRock, which actually under that pressure produced a pretty interesting set of documents in midwinter, saying that they're now going to take the climate crisis very seriously, and why you've seen so much pressure on Chase Bank, the world's biggest lender to the fossil fuel industry. Were it not for the pandemic, we would have had on Earth Day people doing civil disobedience, I think, in half the 5,200 Chase Bank branches around America, because some of us went to jail in January at the Chase Bank branch in DC, with Jane Fonda on the other side of the glass, kind of cheering us on. Taken all together, this has been, this divestment and this stopthemoneypipeline.com work that we're calling, have been one of the really big chunks of the climate fight over the last few years. And they're telling. I mean, Shell said last year in its annual report that divestment had become a material risk to its business, which is good because Shell's business is a material risk to planet Earth. And, when the coal companies lined up for their bailout a couple of weeks ago, they told the Congress that one of the reasons they needed it was because divestment had deprived them of any of their sources of capital. There just aren't funds willing to invest in these guys anymore, both because it's immoral and they're going to catch hell for it, and because, as probably Leslie will describe or I will, investing in fossil fuel for the last 10 years has been a good way to lose your shirt too.
So speaking of that, I wanted to ask Leslie. So Leslie, to hear the two of you talk, obviously, one, there's a moral imperative here, and two, this business is deteriorating. And yet, as you well know, as somebody who works in the money business, a lot of investment companies haven't yet come out with these compelling statements saying they need to change their ways, saying we need to change how we invest. They've resisted the idea of divestment. They've resisted the idea of offering fossil fuel light or low carbon portfolios. So why is that? What's happening there?
Well, that's a really good question. It wasn't a question for us because we were founded as an environmentally responsible firm and never were in coal or major oil. And didn't even really think about it as we're divesting. That was in line with our values. Partially because, well, in large part actually, because we were founded by environmental and public health groups called the PIRGs. But as the divestment campaign started, it was made just a natural match for us to get rid of the last gas companies. And we have been happy and really excited to support the divestment campaign. But in the early days, it was incredibly controversial among our peers, and we were really sort of singled out in a way. But they are very slow to move. They have been very, very slow. Why? I think that many of the firms just have a lot of investments in coal, oil, and gas. They have not paid attention to the historic returns. They manage money for other firms, including those in this industry, and they have not realized that engagement is not working. So that question alone, Tim, could be like the whole webinar. So I'm just hitting on some points that maybe we can come back to later.
So I want to come back with one follow-up on that. And then I would like to move on to Bill's point about what some of the apparently positive things that some of the big investment companies are doing. But Leslie, there have historically been arguments about underperformance. If you limit the companies, the stocks, the bonds, if you limit what you invest in, you're not going to get good performance from your investments. And I gather that sort of conventional wisdom has been changing based on research, based on data. And I was hoping you'd talk a little bit about that. What does the data now show about the performance of investing in a low carbon or a fossil fuel free portfolio?
That's a really good point. And this is the point that when we talk with people all over the country, that's the most surprising part, is that the performance aspect shows a few things. One, as Bill mentioned, the traditional energy sector has been the worst performing sector in not only the last year, but the last 15 years, last decade. There are a lot of studies that point out the both potential as well as actual performance that show how fossil fuel-free investments perform better than conventional models. And interestingly, just in the last 2 weeks, there have been a number of articles that have come out by Morningstar and S&P around how funds that pay attention to environmental, social, or governance issues, including fossil fuel-free funds like ourselves, have outperformed conventional funds during this really volatile period of the first quarter. So I'm not giving financial advice. Again, just as the disclaimer I'm going to keep saying during the webinar, but there is a lot of information out there that people who care and want to explore fossil fuel-free investing can use to see what would have happened before and might happen in the future.
So one thing I wanted to follow up on that Leslie said for everybody who's listening in, Leslie mentioned two companies, S&P and Morningstar. Those are, S&P is also known as Standard & Poor's, and Morningstar, you heard that name. Those are companies that collect investment information and then analyze stocks and bonds and mutual funds. Morningstar in particular has a website, morningstar.com, where you can actually go and do research on mutual funds. And they even rate funds based on the carbon intensity of the stocks that they own and the bonds that they own. So let me just then jump back to Bill, something you touched on a couple minutes ago when you were talking, which is that several big investment companies within the last year or two have made very public statements about their commitment to trying to solve the climate crisis and about how important it is for us to move to a lower carbon economy and lower carbon investments. And I'm wondering, as a guy who's been watching this for 30 years and certainly probably had a lot of conversations with folks at companies like that, do you view that as important?
I think it's an important proof of the fact that we're built a movement big enough to really worry these guys. Look, I mean, in fact, I am obviously giving financial advice at some level. You just shouldn't pay any attention to it because I'm a writer who lives out in the woods. But let's be clear here. I mean, we've been making a strong movement-based argument that they've had no choice but to pay attention to. But the whole time, it's been rooted in the most fundamental understanding of the energy economy. Think about it for a minute. The fossil fuel industry has two huge problems. One, its product is destroying the world, hence it's increasingly coming under regulatory pressure place after place after place. But that's only half of it. It also now faces incredibly stiff competition from people who figured out how to do the same thing better, cleaner, and cheaper. Wind and solar power have dropped by a factor of 90% in the last decade in price. So it's pretty hard to make a case that you're going to be getting any growth out of the fossil fuel industry. That's made it easier for big investment companies to start behaving a little more morally than they had in the past. They understand that these are drugs on the market, just dogs of stock. So I do think that there's tons of greenwashing that goes on. I also think that there are some really strong signals that are coming out. Look, BlackRock is the single most, the figure something like $1.08 on planet Earth, resides in their digital vault someplace. You saw that the Fed just basically turned the whole whatever it is we're doing around coronavirus, BlackRock is doing it, and they've been the contractor. So when the head of BlackRock, Larry Fink, says, we're going to have to now re-examine everything we know about investing in light of the climate crisis, that's going to get heard. Now, what we'll say, the two key questions I think that we'll find out in relatively short order about the BlackRocks of the world are, one, are they actually going to go vote their proxies aggressively this spring? They own 10% of every company on earth almost. So, you know, they can, if they do, then it'll matter. And two, are they going to start moving biggest clients by a kind of matter of default into their ESG indexes instead of just sticking them in? And if they do, and there's some signs that's starting to happen, that'll be really important. Then the question will become what's actually in those ESG indexes. There's a lot of junk in there. You know, there's a lot of fossil fuel and whatever left in there, but they say they're, you know, going to start figuring it out and whatever, we'll see. But it cannot hurt that they've felt they've understood the financial pressures, the pressures from consumers and activists, that all those pressures have begun to tell. And what they've done, and Leslie really hit the nail on the head here, I think, what they've done is begun to counteract not only the enormous power of the fossil fuel industry, but also they've begun to counteract strongest force on earth, which is inertia. Just like we'll just keep doing what we've done, you know, yesterday, we'll keep doing it tomorrow. That's the easiest way to operate any business in the world. But if you mount up enough of an argument, enough of a campaign, enough of a push, you can begin to overcome inertia. Thank heaven for people who don't require that kind of push, like Green Century, who early on started doing the right thing, both because it was the right thing for the world and actually the right thing for people who were handing them over money too.
Well, that's a good segue, Leslie, for me to ask you. I know you have some strong feelings about this topic too. And I also know, not with the fossil fuel companies, because obviously you guys don't own those, but with other companies, you do the sort of engagement that Bill's talking about. He used the term that may be unfamiliar to some, voting proxies. Just for anybody listening who doesn't know what that means if you own a share of stock in a company, you have a right to vote on important matters that come before that company. Often those votes, they're not required to follow those, but it certainly looks bad for a company if a lot of people who own its stock vote for something and management doesn't do what they've asked. So Leslie, would you talk a little bit about how you guys use that tool to let companies know what you think they should be doing?
Sure, our shareholder advocacy work, that's what we call it. So there's a couple different parts to it. So we've always voted our proxies, and we have criteria that follows environmental, social, and governance, or if people have become familiar with the word ESG, Bill just mentioned it, that's what that means. So we vote our own proxies. We have a very strong, obviously, record on climate change, where BlackRock has a really abysmal record. And so we'll see where that goes. They have been reluctant to give details on how they'll be exactly evaluating new questions that come to them. And so the proof will be in the pudding, as Bill says. It's a good signal, but we really have to wait and see. It's the shareholders and the activists that have pushed them to be at this place. And words are words, actions are actions. And if they did change and didn't just put out one or two products, that would be phenomenal. But it does provide a little bit of cover to other firms that might want to do it. Back to our shareholder advocacy, we have been working with companies, as you mentioned. We engage with them in dialogues. We are working to push them to change their environmental practices or policies. So, for example, how they're sourcing commodities, agricultural commodities such as palm oil. It's not a bad product, for example, but if it's grown by burning down a tropical rainforest, that has all sorts of climate and public health implications. And it really is a business risk for these companies. So at first, as in any engagement, you ask them to make the change that you want them to do. And sometimes that results in an ongoing dialogue and them actually adopting a deforestation policy. And other times it meets a lot of resistance. Sometimes they don't even really want to talk to you. They just sort of lawyer up and say, great, we'll see you at the annual meeting. So that's when we file something called a shareholder resolution. That's one of those questions that appears on the proxy. That's what you all get to vote on if you own stock. It's usually about who should be the accounting firm or who should be on their board of directors, but you'll see an increasing number of other questions like, do you think this company should look into assessing their deforestation risk or their climate risk or something like that? And so we run campaigns on, again, changing how companies look at deforestation risks to protect tropical rainforests. We also have been working a lot to get companies to stop sourcing chicken that's grown with antibiotics, which is becoming increasingly relevant in this day and age. As well as last year, for example, we worked with Verizon to get them to source more renewable energy. So they went up from agreeing originally to want to source 4% to sourcing 50%. And that's a great, huge jump. It's the equivalent of getting 500,000 cars off the road every year. So we have a whole team in-house that does this, and it's a big part of what we do. And I think it's what actually puts the impact in, our funds and in other companies that do that too.
It's
So
such a good, let me just,
yeah, go ahead, Bill.
it's such a good and important thing, shareholder engagement, to be doing. And just the point to get across is the one place where it clearly doesn't work is with fossil fuel companies themselves. And if you think about it, the reason's obvious. Most shareholder engagement is about fixing some flaw in the business model, the palm oil stuff that Leslie was talking about, where you source something from, or Apple pays its Chinese workers too low wages. So you protest, put up some fuss, they raise the wages of people in China, the price of an iPhone goes up $1, everybody's happy. The problem with the fossil fuel industry is there's not a flaw in the business plan, the flaw is the business plan.
Mm-hmm.
Like, all they know how to do is dig stuff up and burn it. And now 30 years on, they're devoting 2 or 3% of their capex budget to renewable energy and things. I have a feeling that Exxon is spending more money advertising its algae project than it is on its algae project. But I mean, all they do is do what they've always done. And so shareholder engagements had no effect. I mean, you're just talking to the wall. And that's why it was so important for people to put the pressure on through actual divestment.
So Bill, there's something I want to say kind of lurking in the background here behind what both you and Leslie are saying. And that is something I know you've written about, and Leslie, you and I have talked about. And that is the idea of, and this is going to sound, pardon folks who are listening in, it's going to sound a little nerdy, so bear with us. Social license to operate. I bring that up because I think sometimes people feel like, well, what could my $5,000, my $10,000, my $50,000, how could that ever influence anything that happens at ExxonMobil? Now, obviously, part of it is people coming together, and as people come together, they have greater influence. But there is also this idea that you guys have both, I think, thought about, social license to operate, and how what you're doing, both Bill at 350 and Leslie at Green Century, influence companies' social license to operate. So I was hoping you guys would talk about that a little bit.
I think Bill should go first.
It's a phrase I started using back in Naomi and I back about almost a decade ago, as we were trying to think about what we were trying to do, because we didn't know whether divestment would reach a level quickly enough to really begin to affect flows of capital. So what else was the reason for doing it? And the reason for doing it was to try and change people's perceptions of these companies. It was important organizing idea because most people don't have a coal mine or a oil pipeline in their backyard, but everybody has a connection to some pot of money nearby, a pension fund, a university endowment. And so this enabled the climate fight to be going on in thousands and thousands of places at any given moment. And that was really important. It allowed people to repeat over and over and over again in explaining why their university should divest or something. The numbers that I was telling you before about these guys having 5 times as much carbon as we could afford to burn. And there's actually now been a fair amount of academic research that showed that for the last decade, that was probably the most important way of pushing these messages out into the middle of the public debate over and over and over again. Now, as it happened, the whole thing grew so large that it also began to impede their ability to raise capital, which is really good. We'll take it. But the idea of a social license of a company of facing constant questioning from every side about what it does, about people, about tarnishing its image so that people understand what it was about, that was really important. And I'll just add, the thing that really made that sort of turbocharged that halfway through the decade was the great investigative reporting that suddenly made it clear that the fossil fuel companies had known everything there was to know about climate change back in the 1980s, and then systematically lied about it. And all of a sudden, you know, one really understood why why these guys are the in our time the equivalent of Philip Morris. You know, they're as foul as it gets, and that helped. You know, these two things worked well with each other. That became a big part of the boost for the sort of second half of this divestment decade. They tarnished their own social license in pretty powerful ways.
So Leslie, do you want to add anything on that?
I'd say that divestment is not about, any divestment campaign is not about bankrupting a company. It is about political pressure. It's one of the tools. It's been a super effective one on fossil fuel companies. And just if there's lingering doubts about the seat at the table or staying invested because, you know, you'll have some sway over them, you can't change a company's core business through shareholder advocacy. And it's like getting Starbucks to stop serving coffee. Like it doesn't happen. And there's a big track record on how it's not happened. Investors have been trying. They've been trying for, you know, almost 30 years to get Exxon and Chevron and the other big oil and fracking companies to stop doing it and to actually transition. And unfortunately, it's just been unsuccessful. And the time, you know, from our point of view, it's like, of course, that's what their whole business is to keep extracting and polluting until they can't anymore. And for the planet and for people who care about it, who I assume are like everyone who's listening, that is not okay. And so everyone can do something, and this is what you can do with your money on it. And all the other arguments don't just matter. It's like we're past the time of trying to get them to be good. They're just not gonna change their core business, and that's been played out over and over and over again. So yeah, it was easy for us to divest. We're trying to make it easier for individuals to learn more about it, and we've been really excited to work with 350 and all the other groups that have sort of understood the power of divestment as a way for people to do it, and institutions to do it too.
So Leslie, you talked about in your explanation sort of the power of people's money. One way, maybe most people, I'm not sure about that. Certainly most middle class and working people.
Can you repeat it?
Can you hear me?
No, now I can, but you
Yeah,
can still
sure,
have
sure, sure, sure. Sorry about that, folks. So you were talking about the power of people's money, and I guess that's kind of right. That's behind everything we're talking about. Many people own what investments they own are through 401k plans, through work retirement plans, and they probably feel like they have limited control over what's in those plans, right? They show up at work. They're told to sign up. They sign up. They're told to pick from 8 to 10 mutual funds if they're lucky. They do that. Now you're introducing the idea that, hey, you should broaden what you think about investing in. They're probably going to feel like, well, I can't broaden it. I've only got these 8 to 10 funds. So if you don't have in your 401k plan a green option, a low carbon option, how do you go about getting that?
It's a good question. And we worked with a lot of groups and some companies on this. But for individuals, you would start by talking with someone in your human resources department and find out a little bit more, but mostly to express that you would like something like this. Their initial reaction is going to be negative. I'll just tell you based on experience, they'll be like, yeah, you don't want to do that. They'll throw up all sorts of arguments to which all of us have answers that you can go back with. So then the next step is to get others, especially we have found that if there's someone who has some more authority in the organization or company, they can really be the champion and move it. And it can be in any sphere, or just a lot of people also works. And then you have to present them with lots of information about and combat all the other misconceptions about this. We have seen it work though, and I would encourage you to do it. And there's also, we have a resource on it, and it's also in the fossil fuel guide that 350 and Green Century did.
So speaking of what Leslie's saying, everybody following along with us, I hope you've stuck with us, and we appreciate it if you have. There are ways that you can check your investments, even if they don't seem to be green investments, and see what your kind of carbon intensity, your fossil fuel exposure is. So there is an outfit in California called As You Sow, an environmental group, and they have a website called fossilfreefunds.org where you can put in a mutual fund name, and it'll tell you what the fossil fuel holdings of that mutual fund are. You likewise, we mentioned earlier, Morningstar, the investment information company. You can also go to the Morningstar website, search on a mutual fund's name, and today Morningstar will give you a carbon intensity ranking and a fossil fuel involvement ranking for any mutual fund that I've searched. I can't promise they do it for everyone. I think it's okay for me to do this, so I'm going to just give an example. Just so that people would know how this works, I took 3 mutual funds before our call, and I put them into this Morningstar search engine. I used one of Leslie's funds, one of Green Century's funds. That was their stock fund. And Morningstar said it had about a 2% carbon exposure. That's 2% out of 100, so very small. I did the Vanguard 500 Index Fund, which is a fund that owns the biggest stocks in the American stock market. That had about an 11% exposure, just by comparison. So not at the level of Green Century, but not horrible. Then I did what's called an ETF, an exchange traded fund that only invested in the oil and gas industry. That, as you might guess, had a 95% exposure. So even if you can't get your employer to add a fund that is called low carbon or called green, there are even funds that don't have that label that have less exposure than others. So sorry about that. Sorry about that footnote there, guys.
That's okay. But
At
Tim,
this point, let me just say quickly, Tim, that's good. But at this point, any employer who's not giving you some option that's better than the Vanguard 500 biggest stocks thing isn't trying very hard. It's not like it's very hard anymore to try on ESG offerings. And as Leslie has pointed out, they're way outperforming everybody else. So, have a serious talk with your HR department if they're that antediluvian.
Leslie,
Right.
you were gonna add something.
Well, I was going to add, it's a little bit in the weeds, but carbon exposure and low carbon funds are not the same as fossil fuel-free funds. So the carbon exposure is an indication of the whole portfolio, but if you're looking for fossil fuel-free funds, there are some other ways to do it too. So the tool you mentioned, which is fossilfreefunds.org, which is this online free resource, that is a great way. You can plug in your mutual fund or ETF, and you can see the percentage of fossil fuel holdings and look, and then you can look the opposite way. You can look for fossil fuel-free funds. If you use a financial advisor, which probably some of you do, they are able and should be willing to tell you. And otherwise, if you actually look at the details of your mutual fund or ETF and you're a more involved investor, look for the sector allocation. And what you want is for where to say energy, you want it to be a 0%. So that's traditional energy. And if you're not at 0, it means you're in fossil fuels, which most of you are, even though you didn't intend to be. That is just how it is, because most of the large firms across the board offer only a few ESG products and very few fossil fuel-free products, for the reasons we've talked about before. So I wouldn't feel badly that you're in it now. I think all that matters is what you intend to do with part or all of your investments as you move forward. But I just wouldn't be surprised, even if you had no idea that you were in fracking companies or not, that most traditional funds are. I would say all, except, as someone that works for a mutual fund, I have to couch that.
So Leslie, what about utilities? Those guys, at least some of them, still burn a lot of coal. Should those be eliminated from a fossil fuel-free portfolio?
Well, for Green Core, we do. For Green Century, we do. We eliminate all the companies that extract, explore, refine, process, or transmit fossil fuels. We also eliminate any company with carbon reserves, but we have gone and made sure that if there's a utility that uses, for example, coal to produce electricity, we have taken that out as well. What we found is that investors who say, I don't want to support this reckless industry anymore, they don't want, just to not be in the top 100 or 200 or make an exception for this utility company that's burning fuel. It's just not how they want to approach it. So we have a really comprehensive exclusion, or it's called a screen, for fossil fuels. So I think that that's the authentic way to do it. There are lots of different approaches, and there are lots of approaches that also might sound like fossil fuel-free approaches, but you really have to look under the hood. You can't go by the name of the fund or their tagline, or, if they have a picture of a nice green mountain or something on it, that alone does not tell you what is in the portfolio.
So the way we've talked about this, because I think that's who's listening today, is that this is individual folks like us deciding what to do with our personal, our families' money. But big institutions like universities and employee pension funds, for example, the state of California's employee pension funds, have addressed these questions. And Bill, my understanding is that you've even done some work, either campaign work or maybe even some sort of, not consulting like a consultant, but even given people some advice about, hey, you big university endowment funds, you big pension funds, you should get out of this, and you can, and that they have responded. And so I was hoping you guys might talk about that, because that does kind of put the lie to the notion that big sophisticated investors don't do this.
Yeah, no, big lazy investors don't do this. but big sophisticated investors are the ones who are doing it. The Norwegian Sovereign Wealth Fund, which I think is the biggest single investment pool of capital on the whole planet, $1 trillion, divested beginning last year. That was, should have been a signal to everyone, because they made all that money in North Sea oil. These guys are as close to the oil markets as it's possible to get. And they were like, yeah, you know what? This is not the casino we want to be in anymore. And they were smart. They got out before, the price of oil went to whatever it is today, $11 a barrel or something. The University of California, I mean, their investment system, I mean, that's $80 billion. They've got high-end folks running their investment shop. And they were like, this is way too risky anymore for us to be invested in, so we're not doing it. The City of New York Pension Fund, I mean, talk about smart money. These guys are sitting on Wall Street. We're taking our $200 billion and getting out. We're not doing this anymore. And the people who didn't were the lazy ones. So by contrast, the State of New York Pension Fund didn't divest. And the corporate knights did some analysis last year and found that they've managed to, by not divesting from fossil fuel when we asked them to, they've managed to lose $17,000 per pensioner in the state of New York. So we're talking real money here that people have tossed down the toilet just because they were too lazy to get out of the blue chips where they'd be rested comfortably for. You got to pay attention to the world changing around you. And the changes are half the sea ice in the Arctic is melted, and a solar panel provides cheap power all of a sudden in a way that it didn't 20 or 25 years ago. And if you can't get those two basic facts down, then you can't be, I don't know why anyone would trust you with their money.
So Leslie, I want to kind of get you to build on what Bill has been talking about, which is if somebody is involved with, maybe it's their alma mater, or they're a student at a university, or even they're involved in a church that's big enough that it has investments. How do you get those folks to change their investments?
Well, for institutional work, you need to run a campaign, basically. That is what all the students and people in faith-based institutions and other community institutions have been doing now for years, where it's worked. So you need to articulate why you want to do it. You need to use usually the financial arguments to persuade the people on the budget and finance committee who are just worried. They probably don't know that much about this. They have some outdated notions about performance. And then you need to go and advocate for the changes and make the change. I mean, it's the same as if you're working with your own financial advisor or anyone you want to influence. There's a few kind of steps to take on it. I know that there are student handbooks for campus organizing, and we have some resources on the Green Century website on retirement plans. 350 has a lot of resources on their website to support these kind of campaigns. But if I can, I did want to talk about how people work with their advisors, if people have advisors.
I was going to ask you about that. So please go ahead. I was going to say, so if you do work with an advisor and that person, and you moot this idea and that person says, that's crazy, that's only for hippies, you don't want to do that, what do you say?
Yeah, they do say all those things. First, don't be discouraged if that's what happens. Your advisor, again, probably just isn't familiar. They've been doing kind of the same thing for a long time. And again, they have these outdated notions about what this all means. So first, you have to be direct. You have to remember that financial advisors work for you. You pay them to invest with your goals in mind. And if this is what you want to explore, they should be doing that. So ask them for options. So at the next quarterly meeting, ask them to come back with options for you. if they are really just flummoxed, they don't want to seem like they don't know what they're doing, give them some information, any of the things that we talked about, and ask them to look into it for you. And then really lastly, the thing is that if this is something you want to do, if your advisor really isn't willing to do it for you, you should consider moving. I know that's a bigger decision for people, but there's a growing number of financial advisors who are dedicated to environmentally and socially responsible investing, and they're more than willing to help you invest with these values. So don't feel like you're stuck with someone that is not serving you the way you want them to.
So that all makes sense. Bill, in environment and science writing as a journalist and writer, that you probably didn't start off knowing a lot about these companies and investing. How did you handle this in your own life? Did you hire somebody and say, don't put me in any bad stuff? Did you educate yourself? How did you handle this in your life?
No, I handled it the easiest way, which is by spending your life as a writer and volunteer activist who, off to jail all the time. It's incredibly easy to not have to worry about this if you don't have anything to invest. So, that's definitely one way to handle it. That's just, what I should have done if I was smart, when I wrote the first piece about all of this for Rolling Stone that went very viral 10 years ago, is I mean, you guys know how to do this, but I think if I'd had the sense to borrow a lot of money and short fossil fuel stocks, I could fund the entire climate movement, for the next 20 years. But, oh well, we'll just settle for, taking them down.
All right, fair enough. So we don't have a ton of time left. We have about 5 minutes left. And so I wanted to get through a couple questions for both of you guys. One is, what do you think the biggest misunderstandings are about divestment and fossil fuel-free investing? And so, Leslie, why don't you go first? What's the biggest misunderstanding out there?
I think there are a couple. One is that it's really hard to do. It's not really hard to do. Especially if you're just starting to invest or you have some money to invest now. And again, I'm not a financial advisor. We're giving financial advice, but there's a step-by-step way to do it. And there are offerings out there where you can just put in your IRA money now by July 15th this year. So I would just say get started. Don't feel so stuck that you have to be an expert to get going. The second is around performance that we talked about, and that is a common thing that people who don't want to do it for you or with you will put up as the challenge. And again, we've cited a lot of data, but that is a big one. And then the last one is that, it's not the be all and end all. To which I go, well, there's nothing that's the be all and end all on solving, the climate crisis. So we need to be sort of firing on all pistons, using all the tools in the toolbox, just doing all the other things we can. And so don't have this barrier between what you do during the day, like recycling and going to a climate action rally or writing a letter to your congressperson and then going, oh, my money's over here. It's just part of the continuum.
So, and Bill, what about you? What do you think the biggest
Well, I think what Leslie just said is really smart. People always say, well, divestment by itself is not going to solve the climate problem. You say, yes, that's entirely true. It's not. Nothing by itself is going to solve the climate. This is the biggest problem we ever faced. It's, enormous political, economic thing that has to be attacked from 100 angles when we get off the phone, the Zoom here. We're hard at work today trying to stop the Keystone Pipeline. And, for 10 years, we've managed to do it. We take on these guys in every possible way, and this is just one of them. But it's an important one of them. And I guess the thing I would say is, on the list of hard things that people are going to have to do because of climate change, like move their coastal, peasant farm in Bangladesh and live in a cardboard box on the edge of the capital city, or, all the horrible, difficult, life-altering events that, on the list of things that you'd have to do, changing, telling your advisor to move your money from one fund to another is kind of on the easy end of the spectrum. So there's really not a huge reason not to be doing it.
So that we have about 2 minutes left, and we're going to give a little information out at the end. But before we get there, I should ask you two guys, is there anything I should have asked you, anything quickly you want to add to just kind of cap our discussion?
You've done good, Tim. Nice work.
Thanks, Bill.
Yeah, it's been great. Thank everyone for joining us. I would add that take advantage of people who know about the issues and get the free resources, and think about doing this for Earth Day. I mean,
that's right.
Earth Day
plus 50. You can't go out and be in the streets, so you might as well do this. And I would just like to thank Leslie for being a real pioneer in this work and sticking with it for a long time. So thank you.
Hey, Leslie, you mentioned the free resources, and I think you wanted to just tell people to kind of end our discussion where they can get more information, where you can find those free resources. So where can you find it?
Well, on Environment America, thank you for sponsoring this webinar or live panel. It's on there's a link to the guide that 350 and Green Century did on their fossil fuel free page. You could also go to greencentury.com and find it. And again, there's resources on the 350 page. And I also want to thank Bill. I remember many years ago when I was running a different organization, reading End of Nature. I distinctly remember reading it at the bus stop and going, wow, this is a big book. And so you've inspired so many people, and it's just great to be able to work in solidarity with you.
Amen.
All right, so thank you, Environment America. Thank you, Bill McKibben, and thank you, Leslie. We
take care, y'all.
Listening to it today, and good luck with your investments. All right, bye now.
Bye. Happy Earth Day.